residential property market finally has its full year report card when ULA released real estate statistics for fourth quarter 2018 early this week. As the year of the dog is coming to a close, let's review the performance of the housing market and the lessons we learned last year. Lesson 1. You can't wet fire in paper. Remember, stock prices kept going up from January. Everyone felt they are richer, and that's when developers found the perfect time to launch new projects. There was so much noise in the market about market recovery and speculation on ease of cooling measures. With new launch prices going higher and higher, of course the property price index would go up higher accordingly in each quarter. But no one seemed to notice that transaction volumes and rental prices never managed to catch up with the calming of prices. You can smell a rat whenever you see market optimism coming only from the supply side, namely the developers, property agencies, bank analysts, and the media. But there is no good news from the demand side, including the rental market, HDB, resale prices, and population growth. From May 2017, I have been warning my board readers that Singapore's housing market is not bottoming out yet. It is at most a dead cat bounce. And after the dead cat bounces, it's just a matter of time to let the cat out of the bag. And who let the cat out of the bag? Is the government. Many say that Singapore housing prices will continue to calm if not because of July's new cooling measures. But that's not true, because sooner or later, we will all realize that when there are already 370,000 private residential units and 30,000 ECs in Singapore, where to find that so many buyers to take up another 54,332 new units in the next 3 to 4 years. Where to find so many tenants to occupy the new units for rent? How to justify an investment with high cost and no return? Lesson learned, those who can't see this will definitely get burnt because no one can wet fire in paper. Lesson 2. Never lose your head over fear of missing out. When your property agent tells you that if you don't buy today, prices will go up tomorrow, how do you know whether it is true or not? The answer is, if the salesperson is pushy and you feel being pressured, or you are forced to make a decision within a tight timeline, most likely the other party is trying to call out the fear of missing out monster in you. Think the 1,000 desperate buyers who queue up to buy any unit from the not so ready to launch new projects on the evening of July the 5th. Developers are now making use of every festival and occasion to give away discounts, rebates, luxury car vouchers, and lucky draw prizes to clear as many units as possible. Those early buyers from the same projects thought they could save 5 to 10% cash, but they end up paying the top price. Trust me, for properties, as soon as you have the need and the money, you won't miss the boat to buy. It is because, unlike the equity market, the housing market won't collapse or recover overnight. Compared with stocks, property purchases require much higher capital outlay and longer transaction time. Property's illiquid nature means that even if you don't pay attention to the market for a few months, you will still notice the change in direction and you know when is the time to buy or sell, unless you abide by personal greed or fear. Besides, the new ULA guidelines also told us that the private home market doesn't reward the early birds, because from January 17 onwards, buyers can expect more livable homes with more spacious units, bigger communal spaces, and smaller balconies. According to SRX, we have a total of 43 condo and private projects launched the whole of last year. This year, we already have 60 new projects waiting to be launched. In 2019, buyers will be spoiled for choices with 40% more projects to choose from in the market. Lesson learned, our gazoo culture doesn't help in buying properties. Don't lose your head over fear of missing out. Lesson 3, developers' stomach isn't a bottomless pit. According to CBRE, for the first half of 2018, 31 residential collective sales were closed at a total value of $9.69 billion. But for the second half of last year, on-board sales dropped 95% to close at $484 million only. JLL admits that from January to November last year, at least 60 sites going for on-board sales closed their tenders without a buyer. The same projects are being put up for sale again with a lower asking price, but they often end up to be another unsuccessful attempt. Lesson learned? Even for big and cash-rich developers, their stomach is not a bottomless pit for three main reasons. Firstly, developers' land banks are almost full. Developers had to build up their depleted land bank with shortage of valuable plots of land a few years ago. But after 1.5 years aggressive bidding at government land sales and high-profile acquisitions of on-board sales, developers now have more than enough stocks in their land bank. Secondly, market conditions have changed. When times are good, developers are in the mood to buy more sites, launch more projects, and bring in more profits. But times have changed now. Externally, we are all facing challenges of tightened borrowing, interest rate hikes, US-China trade war, and global economic slowdown. Internally, with high ABSD and new URA guidelines, the already miserable profit margins of developers are being squeezed further. Yet, they are passed by the fast approaching 5-year ABSD and 2-year qualifying certificate deadlines. And with 60 new projects competing for a shrinking pool of new buyers, can you imagine the level of competition developers are going to face in the near future? Thirdly, sales numbers don't look good. Private home prices have gone up 7.9% in 2018. Remember, prices in the first half of 2018 has already increased 7.3%. But even after 1,000 last-minute new units sold on the evening of July the 5th, for the whole of second half, prices only come 0.6% to reach 7.9%. Look at the URA table on number of units transacted in the whole of Singapore. It is meaningless to see the number of new sales because it depends on whether developers have new launch projects in that quarter. If you look at the number of resale transactions, you will notice that volume in the last quarter has dropped 58% to 1,971 from the peak in the second quarter. Now we are officially falling back to the level of 2016 first quarter. Lesson 4. Your home can be a depreciating liability. Recently, there is public concern over depreciating value of older HDB flats. Depreciation in value comes from both aging of the physical building and number of remaining years in the 99-year lease. The truth is, lower value of older flats and borrowing restrictions of old flats have always been there. But whether you are aware of it, whether you choose to face it, and whether you know how to deal with it is another thing. In the last few decades, Singapore went through the stage from an emerging market to a developed country. Housing prices also escalate along with our growth in GDP and inflation. Singaporeans have seen how they can benefit from the rapid appreciation in value of their homes. But many are not aware of the fact that Singapore has also joined the other developed countries in the world to be a mature market with an aging population. From now on, the evolution of our property market will follow the path of developed countries. Many also forget the fact that property is a depreciating liability. When our homes age, they will depreciate over time while we are still paying the mortgage, repairs, and upgrading work. Lessons learned? Whether you stay in a private home or an HDB flat, a freehold or leasehold property, your home is just a residence. It is not an asset. Net worth is always calculated as your total assets minus your total liabilities minus the home you are staying in. Don't overcommit and put all the eggs in one basket. Separate your retirement fund from whatever value of your home. If it's not enough, why size your home before it is too late? I hope you have learned from the 4 property lessons last year. Don't forget to watch the video presentations of the Year of the Pig property strategies. Let me take this opportunity to wish you and your family a healthy and prosperous Chinese New Year. 恭喜發財 and see you again next time.